Okay, so in this video I want to talk to you about what the broker makes out of the Forex market. So it's what the broker makes. Now, as we've already discussed, when you're trading a Forex pair, you're trading in terms of lots. And as we've mentioned before, a lot represents 100,000 units of the currency. So it's basically 100,000 units of the base currency. In the example of the Euro USD, a transaction would be 100,000 euros against the second currency, which is known as the quote currency, at the exchange rate. So let's give an example here. We've got the Euro USD with an ask price of 1.1415 and a bid price 1.1414. So as you know, there's two prices, an ask, a bid and an ask. If you are buying, if you think the market is going to go up in value, then you'll be looking at the ask price. Of course, if you think the market is going to go down in value, you look for the bid price. Because you want it to go down, you look to sell the market. Now, in this example, what does it actually mean? So what it actually means is you're exchanging 100,000 euros into US dollars at that exchange rate. And that would equate to $114,150 at the ask price. Now the bid price, same thing, 1.1414 would equal $114,140. So you can see here the difference between the bid and the ask is the difference between 4 and 5. That's basically 1. That is a 1 pip spread. How does that equate in financial terms? Well, it basically equates to the difference between these two figures. $150 minus $140 gives you a difference of $10. So you can see here the difference in the spread, 1 pip, equates to $10. Now, when you buy a foreign exchange currency or buy anything, you want to sell it for a higher price. Let's assume in this example that prices don't move. When you buy at the ask, at some point you have to level off. Where do you level off? You level off here at the bid, at the lower price, in which case you are losing 1 pip. So assuming that the market does not move, to enter that transaction at the ask and then to level off at the bid will cost you $10 on a 1 lot transaction. Of course, you can trade multiples of 1 lots, or you can trade fractions of a lot as well. But the broker is basically making $10 every time you hit the bid and the ask if the price doesn't move. Now clearly you want the markets to move up if you're buying, in which case you'll be hopefully selling the Euro US dollar at a higher price, in which case the price and the spread here won't have so much of an impact on you. But of course in this example the price hasn't moved, so you need to understand that when the prices don't move and you buy at the ask, sell at the bid, it's going to cost you $10, and that $10, the spread, is where the broker makes his money. Now that's not the only way the broker makes his money, not just on the spread. The broker will typically also make a commission on the transaction, and the commission will be charged regardless of whether the transaction makes or loses money. So typically they could charge anything $8, $9, $10 per round trip. A round trip basically means buying and selling. And that will be applied, as I say, regardless of whether you make money in the transaction. So the broker makes money not only on the spread, but also on the commission. Now, imagine you're doing this multiple times a day. You're trading 1 lot multiple times a day at $10 a go. Say you're doing that 100 times a day. Well, you're paying basically $1,000 in the spread plus the commission, the percentage commission, as I say, that could be $8 or $9, $10. You're paying the spread plus the commission plus. So you need to make sure that your transaction, your strategy, is delivering you more than the cost of doing business. And we're going to show you in future videos how you can factor in, or how you can use these costs, and how you can factor in these costs into your strategies to make sure that it's a profitable strategy in the end. Because quite often you'll find people have very good strategies, very profitable strategies with a great expectancy, but the commissions and the spread will eat away at this and turn a profitable strategy into a losing strategy. And we're going to talk about that again in further videos, so do make sure you stay tuned for those.